Hello everyone, this is Rachel live from 𝐊𝐴𝐴 Studios and you're watching the Market Movers. Now the ASX seems to be extending losses for the second straight session. Rate hike expectations and rising COVID-19 cases dented market sentiment, while an uptick in commodity price limited the day's loss. On that note, let us zoom our lens on the market performance today and the drivers under the spotlight. Australian shares continue to trade lower, albeit pairing most of early losses, led by a strong rally in tech stocks. The information technology sector surged over 2.6%, tracking overnight gains in the Nasdaq Composite as investors bet on growth-driven tech stocks. The emergence of the latest coronavirus cluster in the most populous city of Sydney weighted on market sentiment. Restrictions have been imposed in Sydney after another 16 COVID-19 cases were found in the community. Meanwhile, in a respite to the market, the US Federal Reserve Chairman Jerome Powell has confirmed that the central bank is not looking to raise interest rates too quickly. Concerns over rate hikes has triggered uncertainty in the market. Back home again, Australia's largest bank, the Commonwealth Bank of Australia, has warned that interest rates could rise before the end of next year. CBA expects the Reserve Bank of Australia to begin normalising monetary policy in late 2022. The lender estimated the cash rate target at 0.5% by the end of 2022. And then climbing to 1.25% by 2023. Two of the big four banks, the ANZ and Westpac, have already forecasted that the Reserve Bank of Australia would be forced to hike rates sooner than expected. Among the individual stocks, Redbubble, that's a global online marketing firm, is the top percentage gainer on the ASX currently, rising almost 8%. On the flip side, Australian retailer Woolworths was the top loser so far on the ASX, falling as much as 15.4% to $36, heading towards their worst session ever. Australia's largest supermarket chain sharp drop follows the demerger of liquor and hotel company Endeavour, which debuted on Thursday. Under the demerger, Woolworths shareholders will receive one Endeavour share for every one they already own. Their shares opened at $6.50, but were trading at $5.88 soon after, a valuation of around $10.53 billion. Endeavour was formed back in 2019 when Woolworths combined its drinks and hotels unit. Gold explorer Emerald Resources, their shares rose as much as 12.2% to $1. They're heading for their best day since the 30th of December 2020. The company says it's poured the first gold at its 𝐷𝐿 gold mine in Cambodia. The gold pour is a process where pure gold is heated to molten temperatures and transformed into gold bars on cooling. Meteoric Resources gained as much as 10.4% to 5.3 cents after the diversified minerals explorer said drilling at its Jurina project in Brazil has intersected multiple thick zones of sulfides. The firm added that the company has intercepted this potential mineralization much earlier than anticipated in an area where there's virtually no historic drilling. Looking at sectoral charter now, energy stocks extended their losses for the second day despite a rise in crude prices. And on Wednesday, Brent crude oil prices hit $76 per barrel for the first time since 2018. That was amid tight supplies from the US. August delivery crude oil futures traded 0.09% down at $75.31 a barrel, and WTI crude oil futures for August delivery traded at $73.17 a barrel. That's up 0.1% as at the 24th of June 2021. Moving on, ASX-listed energy companies such as Woodside Petroleum, Santos Oil Search, Beach Resources and Origin Energy are all trading in the red. Moving on to the banking space now, all the big four lenders, Westpac, Commonwealth Bank of Australia, ANZ and the National Australia Bank are all trading lower amid rate hike concerns. In the tech sector, most of the stocks are trading in the green, tracking firm cues from the US counterpart, the Nasdaq, which closed higher in overnight trade. Aussie tech stocks ASXIJ jumped as much as 2.8%, hitting their 5-month high. AXIJ stock is set to post its 6th consecutive session of gains. Buy now, pay later giant Afterpay is the biggest gainer on the sub-index so far today, jumped as much as 7%. An aerial mapping firm Nearmap and network operator Megaport also traded higher. Meanwhile, tech firm Nuix fell as much as 3.6% to hit its record low at $2.51.5. The Macquarie-backed firm has lost more than half of its value since listing in December, failing to meet targets set in its prospectus and downgrading revenue forecasts twice since. The company informed the exchange that a search warrant has been executed at Nuix's Sydney office, seeking documents concerning an investigation into the affairs of an individual. Earlier this month, local media reported that Australia's financial services regulator had sent notices to Nuix and Macquarie Group relating to a probe into allegations that they overstated sales forecasts ahead of their listing on the ASX last year. In the miners space, index heavyweight, the BHP Group, Rio Tinto and the Fortescue Metals Group, along with Pilbara Minerals, are among the top gainers. Latest trade figures from the Australian Bureau of Statistics show that iron ore exports to China surged a massive 20% in May. This iron ore figure has pushed Australia's merchandise exports to a record $39.2 billion. The figures show overall exports to China increased 16%, driven almost entirely by the $2 billion lift in iron ore shipments and a 28% increase in meat. The gold sub-index gold prices ticked up further from the 7-week lows hit last week after the US dollar weakened. Spot gold was up 0.4% at $1,785 and 32 cents an ounce, and the US gold futures were up 0.5% at $1,786 and 60 cents per ounce. The gold futures were trading 0.24% lower at 1,779.45. Australian gold miners such as De Grey Mining, Evolution Mining, Ramelius and Silver Lake Resources are all trading in the green. That's all from me for now. Stay tuned for more live updates on 𝐊𝐴𝐼𝐴 TV across the economy, markets and sectors. I'm Rachel, signing off for now.